I mean, look. Let me start from. Let me not go too far back, but let me start from my university days. I attended my first degree. I attended the University of Dundee in Scotland. I did financial economics, which I loved intently. And after that, I started my banking career. In fact, I actually started when I was there, sort of interim 6-month things, when I worked at Midland Bank. And, started my banking career with NatWest. And, intently enjoyed banking. I liked it a lot. By the time I'd done my MBA, etc., and then joined my Sumitomo Bank in the city there, Campbell Street. It was fun. And then I kind of came across structured finance by accident. I remember my line manager was traveling, and it was MBNA. MBNA, the credit card company, were looking for a bank to sponsor the CPs of their bond issue. And he just dropped it on my desk and said, have a look at this and see if you put a credit application together for it, to go to Tokyo. So I worked on it, and first time I got interested in it. And actually, it had come from our structured finance department. So I did the application, sent it to Tokyo. It was approved as applied for, as in no questions asked, because it was a fantastic application. Structured finance loved it, came to me and asked me if I would join them, which I did, right? And that's how I started my life in the bond industry, that was back in 1996, a long time ago now, jeez. And then we started, and that's how I got into securitization. We started, and I got into securitization, and we did my first deal, which was a 1.4 billion pound, bond issue for Sumitomo Bank. We closed that in early '97. Working with Lehman's of those days. God rest his soul, because he's dead. Lehman's and the law firms, etc. It was a great deal. And I've been in structured finance ever since then. And I left, then I went into what some people call the weapons of mass destruction, structured investment vehicles. I was in one of them, started one off. The one for the Bank of Montreal, working for the investment banking arm, Nesbitt Burns. And I was there for approximately 3 years. And that's actually where I really learned structured finance. The two guys there were, Paul Stevenson, Paul Sekia, fantastic guys, from Moody's. They were managing directors of Moody's, and they left to set this up, and I got hired to join them. So I learned a lot there. And then from there I joined, moved to Washington. And, I did that because I had to look for a way to get back into African space. So the World Bank was a great platform. So I joined them in Washington. And, I saw the opportunity to, work with the government here to develop a bond market. And I knew that without that bond market, you never have a housing market. So, it's been a long journey, but, one that was focused. And so far, so good, I moved to Nigeria in 2005. I joined UBA, Tony Newman, who, I'm sure you've heard of him, one of our great entrepreneurs. And I worked with Tony, and I think it's one of the best experiences I've ever had, at least in understanding, the environment within which I live. It's been a great mentor from that perspective. When I left UBA in 2009, I set up Dunlop Merrifield, this company that we're sitting in right now, and I've been running it for the last 5 years. It's grown into its own, and still growing. And as it is today, I'm seconded from Dunlop into NMRC as its interim CEO to get it started off. I'm enjoying every moment of it. NMRC, which actually stands for the Nigeria I think there are two key things. One is it's there to provide long-term funds in the form of a liquidity facility to commercial and mortgage banks for the purpose of underwriting mortgages. The second also is for it to be like a focal point, to help create a better enabling environment for the mortgage sector. So those are the two twin objectives. One is the financing, and the other one is helping to create, a better enabling environment, for both the players, that's the mortgage, the mortgage banks, the borrowers, the lenders, the whole process of, home acquisition and also disposal, because again, as you know, if you don't have a good, titling foreclosure process, then again, the mortgage market becomes pretty much illiquid. So those are the sort of things that we're all trying to work on, to improve our markets. Let me break that into two things. One is Nigeria, because that principally is the focus here. I think the one I would paraphrase is we're trying to make the 20-year or 20-year mortgage a standard product in Nigeria. Okay, that's never been the case before, right? So I would say that I think the biggest benefit to the average Nigerian, especially the sort of like the younger ones and the generations coming, is that I would like to see them grow up, having a 20-year mortgage as standard. It's like, oh, but that's normal. They will never remember that 10, 15 years ago that was almost impossible to think about. They grow up and it's like normal to them. That's one. I think the other things are more a derivative of everything else. The economic, social, multiplier effects, employment, etc., etc. Those are all derivatives of getting this institution, but not just the institution, the actual industry to work. From the investor standpoint, it's more really, one, you could look at it from people having access, or investors having access to long-term financing, long-term investment opportunities. So let's take pension funds. Pension funds, generally speaking, have long-term liabilities, right? In other words, they have a liability they have to pay out, in future. So by locking in a return, by, for instance, buying 20-year bonds issued by NMLC, that becomes a great asset class for them to acquire. And remember, these bonds are also, apart from the fact that initially would be explicitly guaranteed by the government, would also be secured by the asset. Okay, so like I've always said, I think that the monies needed to fund housing in Nigeria cannot come from Nigeria alone. The amounts are just mind-boggling, and from that perspective would have to come from both the domestic and international markets. With that in mind, one of the most important things we are, at least we're very mindful of, is that the enabling environment we try to create is that can be understood, and more importantly, that gives comfort to international investors, such that they feel very comfortable being able to, say, buy bonds that are issued by the Nigerian Mortgage Refinance Company, so that we have both domestic and international investors, as our entire investor space. with a successful implementation of the company and a successful implementation of the enabling environment, albeit over some time, my view is that, housing in 6 years' time would begin or should begin to take its rightful place, okay, in the GDP component of Nigeria. Okay, so right now it's a tiny fraction, which is extremely sad. I actually tell people, I use the housing deficit, which is widely mentioned as 17 million. I'll let you into a little secret. When I first came here back in 2004, I started working to develop the bond market, for the country, and that's my first one of my first major assignments. But then I was an IFC staff, and the housing deficit then was 17 million. Then, yes. So, and it's still 17 million. So that tells you basically that obviously, with an economy growing at 2.5% on average per annum, in all probability, it's a lot higher than that. All right. Now, let's even take 17 as a number. And let me assume that the average house is circa 10 million naira, which is what? How much is that? I think about $60,000, something like that, less. That $10 million naira per house, 17 million people or 17 million houses, that's 170 trillion. So just housing alone, okay, just using that deficit is already 2 times the size of the economy as is today.
Wow.
I know, that's why mind-boggling. Exactly. It's mind-boggling, absolutely. So the point basically is, there's a lot of jobs, financing, etc., to be done. So, and I'm happy to actually, to a great extent. I mean, when people talk to me about it, say, "Oh, you've been on this for such a long time." But I'm happy that people are beginning to realize the importance of the sector, not just from the size or the GDP, etc. No, but from that. I mean, we talk about the high unemployment we have. Think about how many jobs can be created by having a very vibrant housing sector. The even possible reduction in corruption. Because, as I say, when you have a system that tells you you can only buy a house when you have big sums of money to spend, you invariably, create a system that lends itself to corruption. If that can be eradicated, such that your average worker can own assets of their desire by paying for it comfortably through the incomes they earn, I would be surprised if you don't see a major reduction in corruption in this country. So there are just so many positives that it is worth, putting everything we have into making sure that this works. From a social, economic, and even political standpoint. Like I said, if you remember the first question you asked, which was the objectives, and I said, one is finance and one is enabling environment. To give you an example, we've just hired 6 top law firms. In fact, we just had a meeting in there yesterday, the kickoff meeting. And what's their role? The role is to draft a mortgage rule and a foreclosure rule, right? That can be passed by the pilot states. This mortgage law, all right, is to try and address some of the issues you just mentioned. The issues of titling, the cumbersome bureaucratic process we have. We're trying to now smoothen that, right, by issuing a new law to be passed by the state. You know, in Nigeria, we look at any law that can actually allow the process to run smoother. So let's give an example. Today, consent by the governor is not only needed for title or transfer, it's also needed for a mortgage. What do we need that for? So let's use law to take that out. Can you see what I'm saying? Mm-hmm. So we're basically looking at, okay, let's look at all the issues, the bureaucracy, all the red tape that is totally irrelevant and unnecessary. And let's try and use a new law. So we repeal some of the old conveyancing laws that we have from the old British colonial system for the years and years and years, which have been updated by the British here, in their country, but not updated here. Mm-hmm. So repeal a lot of those, and then, come up with something that's fresh, that is more, and then helps to reduce the number of steps required. You see. So let me give an example. A governor has to sign. Now, the power to sign can be assigned. Most governors today assign it to their commissioners. So why can't we have basically, like for instance, a transfer office for any state, where basically when a transaction occurs, right, all documentation required for transfer just goes to that transfer office. And so long as everything is paid and everything's done, consent is deemed to be given. It doesn't have to go to the governor. The governor has already assigned that power to that office to sign. So, you know what? Title might be coming out in 3 months rather than 3 years. So what I'm saying again, I do go back, is that these issues, the problems we have to solve with homegrown, ideas, and people need to be ready to think outside the box, be ready to attack from different angles, and not be afraid, to challenge, past thinkings, which is what I tend to see people don't like doing in this part of the world. It's the way it's always been done. It's tradition. It's whatever. And you say, hang on, but if the tradition isn't working, then there's something wrong with tradition, or that tradition. Why don't we change it and come up with something new? You know what? In another 50 years' time, somebody will be saying, oh, that's the tradition, not knowing whether something had occurred or something had been in the system before that one. So in other words, things always evolve. And the more the earlier we realize that, the more we're able to embrace change and able to attack our problems and resolve our problems, and come up with methods and systems and etc. that makes the country a much more habitable, enjoyable place to live and grow and work. Let me explain this one. Now, what we promised the Nigerian is that the interest rate will come down. Or we use the term reasonable interest rates. In other words, we're not saying it's going to be a 5% or a 4% mortgage. But what we're saying is, or what we're promising is that the interest rate from when we start operations will be linked to the monetary policy rate. That's number one. What's the monetary policy rate? That's the rate, effectively, the rate at which more or less sets the interest rate in the economy, both for the risk-free rate, as in your bond rates and your treasury rates, etc. That's the rate, that's like the base rate in the UK. Now today, that is actually 12%. Which means that bond rates are hovering around the same level. Okay? And that is your risk-free AAA liquid rate. Now, we can't do a mortgage below that. If you are, you have to subsidize it. Okay? We don't want to subsidize this. Why? Because we want it to be sustainable. Right? we all know that anything that's subsidized has a finite life. Okay? A mortgage market cannot have a finite life. It has to be sustainable. So what we've decided to do is to have a model that allows NMRC, which is linked, when I say linked, the bonds that it issues by virtue of the guarantee of those bonds has the same credit risk as that of the government. Okay? So from that perspective, the idea is that its cost of funding will be very similar to that of the government, albeit maybe with a little premium. To that extent, NMRC is to act as an intermediation vehicle that maybe adds, at this sort of spreads, maybe 25 basis points, all right, and then passes that over to the banks. So let's assume that it was borrowing 20-year money at 11%, and let's say it added 25 basis points. That means then that the cost of funding to Mr. Mortgage Bank, okay, or Miss Mortgage Bank, is 11.25%, 20-year money. Now, that already is progress. Now, let's assume Mr. Mortgage Bank understands that what I do here is about volume. So it says I don't need to put more than 1 or 1.5% as a spread on it, because, I mean, 1.5% spread on 5 trillion is a lot, isn't it? Yep. So those circumstances, you're now looking at a mortgage at about, I think that's about 13.25%. So the customer now is getting a mortgage at 13.25 as opposed to 19, 20, 22 before. Okay? So that's progress now. So right now, if you think about it, that person or the individual is now borrowing at approximately, that was what I said, 1.75, right? Yeah, 1.5, 1.75, whatever it is. About, let's say 2%, maybe something is 2%, make it a round number. 2% above the risk-free rate. You see, that is, to my mind, a fantastic achievement. Moving from 10% or 12% above the risk-free rate to 2%. Now, the risk-free rate today, we said, is 11. Let's assume the risk-free rate goes down to, say, 5%. Can you see how it is possible for mortgages to become single-digit? You see, that's one. 2, today, interest rates is not on the political agenda. It's not really what we talk about. Most people talk about the exchange rate. The reason for that, to my mind, is what percentage of the populace are exposed to the interest rate? None. Now let's look at that from a converse perspective. Let's assume that 80% of the working population had a mortgage. Would interest rates be a political topic? Of course it would be. Because now, your voting public, okay, one of the most important aspects of their pocket is their homes and the mortgages. So when you look at countries and you see them managing interest rates to that low level, there's a reason. You see? So when we start moving our people to that level, you would find that there's a more concentration to ensure that interest rates are always absolutely. You know, the NHF, to my mind, the model was wrong. It was flawed from day one. That's my personal opinion. You cannot have a situation where you say, okay, everybody contributing to a fund, and if from that fund, we'll lend you money to build your houses and lend you money for mortgages. But, oh, by the way, you can't borrow more than 5 million naira. But we'll give it to you at 6%. Now, the interest rate, okay, is unrealistic. Okay? The size of the fund, all right, depending on the number of workers you have, is effectively, it's not limited, but its growth is limited. And then it's being used for two purposes: construction and mortgages. Again, two separate types of businesses. So, to me, I'm not surprised that it's where it is today. In fact, years and years ago, I had advocated that the National Housing Fund be actually restructured into a credit guarantee fund. So the idea basically was that the only way I could see it working, because you see, you need leverage if you're trying to basically scale out. You need leverage. I mean, the fund itself, how much is it? I can't remember, but you know, the size of the fund vis-a-vis what we're talking about. I mean, I just give you an example. 1 million houses, 5 billion naira per house, that's 5 trillion. The fund is a minuscule fraction of that. How can that house the Nigerian populace? I mean, please. So the issue for me was, okay, look, but if they had taken the fund and said, let the fund act as first loss in terms of a capital structure. Now, if you leverage that 10 times, that's about 2 trillion. At least you're beginning to do something. You see, now that 2 trillion would have been 2 trillion of bonds, and then that fund, all right, with the guarantee, would have now been what is available to absorb losses. So what you then, where the fund would have been able to work is that so long as the losses are less than the contributions, the fund will continue to grow, albeit little, but it will continue to grow and be sustainable, and then can support at least some aspect of the housing market. To my mind, I think it's something that we still need to do, but to help with the FMBN in their quest or their restructuring to be the institution that probably finances or provides mortgages for the sort of like lower end of the market. A structure of this nature might be very useful and helpful for them to, you know, so by legally changing that structure, allowing it to work that way, I think then I can see them, you know, having some impact, you know, on the market. The difference, and then when you now sort of like walk back and look at NMLC, you see the difference is if you look at NMLC now, NMLC is very similar to what I've just described in the sense that it's got capital, all right, and then it's a consistent issuer of bonds. You see, so the sustainability of NMLC, right, was designed from day one. Okay. You know, exactly. In fact, I remember when the model first came, it was even designed, you know, for the monies that would come from World Bank to have been used to subsidize the interest rate here. Yes. And we said, if we did that, after lending out the 300 million, what happens? Do we go back cap in hand for another 300? We won't do that. Let's use that to create something that is sustainable for Nigeria, not something that makes us come back in 6 months' time asking for money again. The model is that we would like it to be, for instance, more of a user-investor relationship, but you know, I mean, when we did the first offer, I think it was a minimum was 100 million. 100 million. But you know, the sort of thing is, it's more, you know, it's more of a market enabler as opposed to something that's there to make profits. Okay. I'm not saying it can't be profitable, okay, but it's more of a market enabler. You know, yeah, exactly. It's there to assist the market to grow, as opposed to, oh, how profitable can NMRC itself be, if you catch my drift. You know, that's really what we want it to be. It's really to work similar to what like a development finance institution would be. You know, not 100% in that guise, but it does have an element of, you know, of playing a developmental role. sometimes self-prophecy, can be a very bad thing. I was watching South Africa, who just recently had their elections. Never once did I hear somebody talk about what happens to your, will visa just stop, whatever, etc., 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 or even other countries, Tanzania, and so on and so forth. So I always ask myself, why do we always have this, every 4 years we have this thing that, everything is going to end, and then we have to wait and then start again. It baffles me, to be honest with you. That's one. I mean, if something is fundamentally good, that you don't need to be a genius to see that this has great repercussions for the country. Let's even assume that there was a change in government. I'm assuming that the guys who would come in, are not brainless. They would look at this and say, this is very good, and say, obviously continue. Besides, NMRC, which you understand NMRC, is actually a private sector company. Yeah. It's just a private sector company within a government-enabled space, if I can coin it that way. So to me, I just wish and I hope that Nigerians in general can just move away from this cyclical, like self-propagating cyclicality of their markets. And when people say things like that, you brush it off, because by the time you consistently brush it off, it becomes a thinking that fades into oblivion. And whether it's an election or not is irrelevant. I mean, I don't think anybody thinks about what's going to happen to this or that because conservatives come, or the Labour come, or the Liberal Democrats. We move on, So I really hope that can happen. I mean, I know we have our challenges, I know we have our problems, but some of these things exist because we also, continue to propagate it unnecessarily. So, my view is, government stays, government goes, no skin off our nose. Family-wise, I got 3 kids, and they're not here, they're all, offshore. But I try as much as I can to see them as often as possible, because I know that there's no part 2 when they're growing up, so I can't rewind it. So when people complain, you're always traveling, I'm always traveling because I have to be my children too. So, and we get on, we have a great time, and so far so good.